Cast. I'm here with Juan Castro and special guest Josh Shinkle. I almost said it wrong, but we're going to keep going with this.
And where is Josh from and why is he here? Josh, what can you tell us about why you're here?
So I am a loan officer with Rocket Mortgage,
Rocket Local,
Rocket
right?
Local. Yes, yes. So Rocket just purchased Redfin, and Redfin owned Bay Equity, which is a mortgage company, and they took all the LOs from Bay Equity and turned them into Rocket Local loan officers. So Rocket is trying to create a local presence in the areas now. So.
So you were with Bay Equity prior to that.
Yes. Yeah, I actually started with Bay Equity back in 2014, worked
Okay.
there for
Wow.
6 years, and 2020 decided to go off on my own, went into the broker world, learned a lot, helped a lot of families, and then spoke with a few people about this transition and the changes that Rocket were going to bring on, and seemed like a great opportunity to join on and get back to it. So I joined Bay Equity for about a month, and then they made the transition to Rocket.
So what was your
Fantastic,
first
man.
thought when you heard that Rocket was partnering or acquiring Redfin and Redfin is now powered by Rocket? You got like your first initial, what the heck is going on?
It, I think it was a sign that the industry was changing.
Okay. In what way?
Yeah,
What way do you think?
with well, I think just with technology and how we're reaching buyers and clients that way. With obviously Redfin is a huge platform. So many people visit that site every day, and for a mortgage company to take on that type of a site with a real estate company and offering mortgages, um, they're able to now offer the home buying experience and save buyers tens of thousands of dollars, having everything inside. So
Right.
it's very, very exciting.
What's that?
Exactly. I think of it, Josh, as an efficiency position for Rocket. So the more efficient they become, the more they can leverage what they can do for buyers and sellers ultimately, now that they own
Absolutely.
Redfin.
Yeah, yeah, and hasn't closed yet, but they're working on closing Mr. Cooper, which will allow them to service their loans as well. And it's really just going to give them the ability to um, do everything from start to finish and hang on to the clients and service them, over the years. So,
Can you
So if we
explain what
treat people
servicing means?
good,
I think we touched on that a little bit, but can you
yeah,
explain what servicing the mortgage means?
so after a loan is funded, the lender will hang on to the loan and then it gets sold to either Fannie or Freddie, and then the loan servicer will purchase a loan and they essentially service the loan. So the client's going to send them the monthly payment and then they will disperse of the interest. They'll hang on to the escrow account and pay the property taxes and the homeowner's insurance. So they essentially just service the loan. And what it does is it gives the lender liquidity to put money back into the market so they can continue to finance new buyers.
Okay. So now
wow.
with Mr. Cooper being acquired also, everything's going to stay in-house, basically.
Yes. Yep. Exactly. Yeah.
So own their own loan officers, their own servicers, own realtors, what else?
Title
Title
company.
company, all of it.
Everything.
So,
Yep.
so if you do a good job or we do a good job, people never need to leave the circle.
That's the idea.
That's pretty good, isn't it?
Oh yeah.
Fantastic. Well, I think with Redfin being acquired, Rocket has already come out with a promotion to help buyers and sellers. Can you
Yeah.
tell us about that?
Yeah. So working with Rockin' and Redfin, we're offering either a 1.0 buy down, or you can use three quarters of a percent of the loan amount to go towards a seller or I'm sorry, a closing cost credit. So depending on whatever that loan amount is, you take 0.75% of that, and that money can either be applied towards the buy down. And if somebody isn't rate sensitive and they just want to come out of pocket with less money, then they
Yeah.
can just use it to go towards the closing cost, whether it's your standard closing cost or if they want to do more of a permanent buy down versus the temporary buy down. And
Okay.
that works for buyers that are working with a Redfin agent and using their loan through Rocket, or it works on if Redfin has a listing and a buyer goes to purchase that home, we can offer it to that buyer as well since they're purchasing a Redfin listing.
So that helps our sellers with their properties to become more marketable.
Absolutely. Yep.
That helps the buyers who sell with Redfin and save money because of our efficiency, who buy with us and save money because of our sell to buy. And then now with Rocket,
Yep.
and they're all stackable.
Yes. Yep.
And what
Fantastic.
happens if the seller is offering, or if I'm representing a buyer now and I ask the seller to contribute towards the closing costs?
So that's still going to go down to the agency guidelines with seller concession and how much is allowable
Okay.
per the either the product or it changes and varies with conventional based on the down payment. But the seller concession is still going to be allowed on top of the lender credit.
Because
So
they're
a
separate items.
$400,000 FHA loan can get 6%.
Yes. Yep.
So they can get times for 24,000, right? I think, plus that 0.75% closing cost, or 1% off the rate for a year.
Correct. The big thing that with that though is there has to be that much cost
Yeah.
So there's
to
not going to be
use.
that much cost in closing costs and prepaid, typically.
Right.
So it's
Right.
probably
Yeah. So
more.
24 like that probably wouldn't work. Because even if you tried to buy the rate down by that much, there would be the fees would be really high, and there's a threshold with how much fees you can have on a loan. So
Yeah.
um, in a scenario like that, maybe not, but as long as you're having enough credit to cover all your closing costs and the allowable fees to buy down the interest rate, you can definitely bundle them together.
What if, I don't know how this works. So the whole thing with buyer's agent compensation, what if part of that was to pay their buyer's agent? Is then that allowed separately from closing costs?
That I don't know.
Okay.
Yeah, because it's not it obviously it is a fee, but it's not part of the standard closing cost fees. I think it's treated
Right.
as a commission, so I believe
Yeah.
it's treated a little bit different.
Like if it's a different line item, I think is
Right.
what it is. It has to be a different line item.
Yeah.
It can't be something the lender puts there. It has to be something outside of that, almost like a survey.
Right.
Right. Right.
So maybe it would be like a prepaid item, or I don't know.
Yeah.
Yeah, that's something we can look into. I can definitely look
I'm
into it and
curious
let you
about
know.
that to see if they can, if that increases how much they can get based on their fees.
Yeah.
I just had another question. I forgot. So 1% rate buy down for a year, and you don't have to do quick math, but maybe you have some kind of numbers on the same scenario or a different number, whatever's easier. What does that save the buyer monthly for that year?
So I've looked at scenarios, and obviously it varies on loan amounts,
Yeah.
but it could be somewhere in the range of $300 a month.
So pretty
Oh,
Yeah,
wow.
yeah.
it's going to be based on the loan amount, but yeah, you could see savings of 300,
Couple
three
$100
fifty.
a month.
Yeah. Uh-huh.
And then
So a typical
if the
house for
rate
us
goes
is
down.
probably around 500.
Okay.
So I'm just wondering in my mind what 500 would look like. I know it's just we're not going to be able to calculate taxes and insurance because that's individualistic for the house. But just on a loan itself, if you had an idea,
I have a calculator right here.
look at that
Give you some good numbers.
right on the fly. We'll have Chat GPT check you later.
All right, so let's just say we have a $500,000 purchase with 10% down and an
Yeah,
interest rate of 6.75. So,
perfect.
your principal and interest on that is going to be 29.18 a month.
Okay.
29.18 versus 26.26. So it's about a
Wow.
$300
Yeah, just like you
$300
said.
difference.
So
Yeah.
that's-
So an everyday scenario is about $300, give or take a little bit.
Yeah.
And
That's
then,
And
fantastic.
again, I think it really comes down to the individual and are they rate sensitive and do they want that lower payment? And the idea behind the temporary buy down is to get a lower interest rate and hopefully refinance before that period ends. And so if they want to have that lower rate and that more comfortable payment for the first 12 months, knowing that it's going to switch if they don't refinance and rates don't come
Yeah,
down, at least gives them a little bit, the ability to, get into the home, save some money each month. Or if they're not rate sensitive, then again, you can use that to go towards your closing costs. If, sometimes it's a tough market if you're in a
yeah,
competitive home and you don't want to ask for so much credit or you don't want to ask for any credit. This
right.
is a way to get some credit, help out with
yeah.
that closing cost and lower their money out of pocket.
But their pre-approval then is based on the current rate, right? So you want to make sure that they can afford the higher payment.
Exactly. Yeah, yeah.
Yeah.
Yes, it's going to go off of the expected rate.
Right.
Correct. Yep.
Now, let's talk, I think a lot of buyers want to know about the pre-approval process, right? Like how do they know their budget? What does it look like?
So this is one of the things I love most about Rocket, and it's been a crazy week just learning their
I know it's only
systems,
one
their
week and we're
process.
putting Josh on the spot. Like, what do you know about Rocket? Tell us
Yeah,
everything.
yeah. What is your takeaway? What nuggets do you have that you're like, wow, this is really pretty nice?
Yeah. So the great thing about it is we can go through a quick application, do a soft pull, so we're not, affecting their credit score. It's not a hard inquiry, and from there, give them a pre-qualification. Based on the information that you've given me, we can approve you for this amount, and the pre-qualification goes out. Well, from there, they receive. Everyone has a Rocket account. They have an awesome app that they can download, and their everything goes through the app. So if they have to sign
Wow.
documents, if they have to upload. Uh, uh,
W-2s.
Conditions, yeah, all that. And then they can also follow the loan process all the way through. If they want to know where their loan is, if it's in
Wow.
underwriting, if the appraisal comes back, all through the app. So we do the pre-qualification. They upload their income and they upload their assets of what they're going to use for the purchase. I can send that file to underwriting, and within 4 hours, we're going to have a pre-underwritten approved loan. All we need is a property address, an appraisal, title work, insurance policy. So within 4 hours, they have a verified approval, pre-underwritten. So when they're submitting offers, now we can show the sellers and the listing agents, hey, this buyer's already been through underwriting, they're pre-approved. We just need the appraisal and we'll get this thing wrapped up. So the ability to do that within 4 hours
Yeah.
is just crazy.
What point do they do the hard credit inquiry?
In process.
Yeah.
So not for the verified, that's later on once they're under contract?
Correct.
Okay.
Actually, no, I take that back. I take that back. To give the verified approval, they have to do a hard pull.
A hard pull for that.
Just confirm what they saw.
Correct. Yeah, because the obviously the soft pull is going to give us a score. It's going to give us their liabilities of, car payments and,
Yeah.
knowing their DTI. But the challenge with it is, and I've had this happen before, where I did a soft pull, we got into contract. 7 days later, I
Late
repulled the
payments.
credit, and the individual had a late payment
Late payments.
on their car, and it completely ruined their credit score.
Yeah. They can't
So
explain it.
if they're gonna issue that verified approval, they want to have a hard inquiry, full credit report, so there's not any kind of surprises after the fact, because they guarantee.
Yeah, what do you see differently on a soft pull than the hard one? Like the report,
Everything's the same.
everything's the same. Okay.
Yep, it's the same report.
I think it's just trade lines. They can see if there's been any lates or anything in the past, right? Like forbearances, things like that.
Well, yeah, it's essentially a full credit report. It's going
Yeah,
to show you all the trade lines. It's going to show you the balances, the payments, any kind of late payment history. It'll give all that information. Um, Again, the challenge with once it's verified is if we happen to pull credit 3 weeks later and there is a missed payment that didn't
of
show
course.
up on the soft pull but now shows up on the hard pull because it reported a few weeks later, that could be a big change.
Yeah,
And with the verified approval, they're guaranteeing $1,000 to the buyer, where if the loan doesn't close, Rocket will give that $1,000 to the buyer. So they want to make sure that,
yeah,
again, once it's verified and we have a hard credit report, there aren't going to be any surprises and no need to pull credit after that. So
yeah.
So they
That's
don't even, once
fantastic.
it's verified, they don't pull the credit again, like right before closing or anything. They're done.
correct.
Okay. Um,
Wow.
what does, um, we're not going to go too much longer, but debt to income, what do you look at as far as getting somebody approved? What would be the average or?
So the a safe number is around like 45 to 50% of their income. With FHA, the mortgage can, depending on credit, but the mortgage can go all the way up to 46.99% of the income. And when you add on their other liabilities,
Yeah.
car payments, credit cards, student loans, that number can go up to 56.99. And with conventional, it's 50/50 or 49.99
So
and
half of
49.
your income can be spent on all of your bills, basically,
Correct. Yeah.
including your mortgage.
And I like to have a conversation, find out because that's one of the biggest questions that I ask up front is, what are you comfortable with
Yeah,
spending?
Yeah.
Because it's not always about getting somebody approved for the most amount. It's,
yeah,
let's set you up for success, make sure you have a payment you're comfortable with. So when you do start shopping and you fall in love with the home, you know that you're going to be comfortable with that payment. So,
Yeah. We talk about
yeah,
that all the time. I need a shoe budget. There's other things. Maybe
and sometimes people are conservative and they keep it around 36%, and sometimes people push to the limit. So it really everyone's different, but yeah, I just like that's one of the first questions I ask, just so I know up front, like, and I can set the expectations. The last thing you want someone to do is fall in love with the property and then find out the
yeah,
payment and say, oh no, there's no way I can handle
yeah,
this,
Right.
yeah,
and then the home that they can handle is never going to live up to the one they fell in love with. So I think that's a huge thing. It's just knowing the numbers, knowing what you're comfortable with, and then starting your search from there.
So when somebody fills it out and they're going to upload their income, what do they need to upload? Like pay stubs, W-2s, what is going to get them that verified?
Yeah, so so most recent pay stub, 2 years of W-2s.
hmm
Now, if we're looking at someone that receives commission or overtime, it's always a good practice to, and a lot of people have access to online portals like ADP or some type
hmm
of online portal. Getting the year-end pay stub from 23 and 24 is going to show it's going to show the same number on the W-2, but it's going to show the breakdown of your base pay, your overtime pay, commission, bonuses. And when we can look at the full average of, the bonus pay, the overtime pay, that's going to allow us to really, dig deep and get their income dialed in as best as possible.
Okay.
So a lot of it really depends on how if someone's paid salary, then, most recent pay stub and W-2s is perfect. But if we're using that overtime, that bonus pay, getting that year-end pay stub always makes it a lot easier to dial in the income and maximize their buying power.
And assets would be like a bank statement or their 401k or where
Exactly.
money's
Yeah.
coming from.
Yeah. Wherever the funds are coming from. I uploaded one today where a gentleman is selling his property and the proceeds are coming from the sale of the home. So we provided a net sheet of that transaction to show how much he was going to net.
Okay.
Oh, that's fantastic. So I think the key is that Rocket is what we would consider worldwide, even though they're national, right?
Right.
But we consider them all over the place.
Solo
but we have
dolo.
someone on the ground here named Josh who knows the same things that all of they know, but he's here on the ground so you can walk our customers through it and explain to them how to get there in layman's terms.
Absolutely. Yeah. And that's, that's the great thing about what they're doing now with
Yeah,
making, having a local presence because,
yeah,
before they never had, and there's still no offices that someone can walk into and talk to a Rocket. Well, actually,
yeah,
there are. I take that back. There are some offices out there,
yeah,
but um, before it was, the warehouse line where you call in and,
sure,
Rocket
sure.
was there. Now they're actually getting a local presence and getting into areas and becoming again, just that local presence.
Yeah. Well, I think what's important is, and I've seen this already because I got you on Facebook already, and I've seen you at the closings for a lot of your customers. So I've seen you be able to connect with them. And I think the important part is like Nancy and I, we don't meet customers at the office. We
Yeah.
meet customers where they want to meet us
Right.
for their courtesy. So I assume it's the same principle. If a customer needs to see you in person because they need you to walk them through something, you would be courteous and say, "Do you want to grab a coffee together? Do you want me to come by your office? Do you want to go by the Redfin office and meet me
Yeah.
there?" So I totally, appreciate how flexible that is, the way that the world is today.
Right.
So I think
Yeah.
that's pretty amazing. But in closing of this, tell us a little bit about, so we know there's FHA, we know there's VA, we know there's conventional, we know Rocket has multiple programs, probably more than we ever thought existed. But is that bridge loan coming out or is that already out? Do you know?
Yeah. Yeah. The bridge loan is out. Um, I
That's a
haven't
big
looked at
deal for
all the
customers.
Yeah, I haven't looked at all the details
Yeah,
of
yeah, it's
the
new.
ins and outs of the guidelines. I do know that they can borrow up to 80% of their existing home that's going to be sold. Um, so whatever the first mortgage is, obviously you can add on to that up to 80%. It's set up as a 6-month balloon payment. So that home obviously will be sold ideally within that 6-month
Yeah,
period. So they'll sell it and pay both loans off. Um, the and it's set up as a balloon payment, so we don't have to hit them with that additional payment and that additional debt.
fantastic. So we'll learn more about that, but I think the key is that Rocket's in tune with the way the market moves and they're able to build products very quickly and get
Absolutely. Yeah,
people where
even
they want to go.
Okay.
yeah,
Yeah.
even when once they started talking about um, the acquisition and bringing Bay to Rocket and um, they had a base set of programs, and then since then they've already discussed bringing on the bridge loan, the DSCR loan, the
Yes,
national DPA programs they're looking at. So they didn't have any of
yeah,
these available before, but with taking on Redfin and acquiring a whole bunch of 200, I think, other
Yeah.
loan officers into Rocket, they listened to our request and started adding products. So it happened very quickly.
fantastic. Yeah, it happened since July 1.
Yeah.
It's crazy what's going on. Josh's head spinning. How would somebody contact you? So now somebody wants to apply. You want to shout out your contact information?
Yeah. Cell phone is 386-214-9938. You can call, text me, available pretty much 7 days a week. If Nancy and Juan are working, I'm working. So,
Yeah, yeah,
and
we're always working.
yeah, email is Josh Shinkle at rocketmortgage.com.
Easy.
Perfect. Thank you, Josh. Thank you so much.
Thanks.
Yeah, hey, thanks for having me. I
Appreciate it.
appreciate it.
All right, guys, we'll see you next week.